In summer 2025, the economy looks steady on the surface, with 2.4% inflation and 4.2% unemployment. But beneath the numbers, things feel shaky, like a fire losing its heat. The economy shrank by 0.5% in the first quarter, the weakest since the pandemic. Wall Street stays hopeful, but regular people quietly talk about a recession. The Federal Reserve keeps interest rates at 4.25%, puzzled by data that doesn't add up. The real shift is a slow drift toward stagflation, rising prices with little growth, like in the 1970s. For many, life feels stuck, prices climb, but opportunities fade. Blame spreads faster than fixes, and even experts seem to be guessing. Talk of an easy recovery fills the news, but people see it in smaller paychecks, empty stores, and fading hope. What is this new time? How did short-term issues become lasting? And what's it like to live in a slow crisis where every solution costs something? Welcome to Economic Circuit, where we explain the forces shaping our world, from big companies to today's trends, in a clear way. We're told inflation is handled, but May 2025's numbers, 2.4% overall, 2.8% core, show it's creeping up, surprising policymakers. It's not one big hit but many small ones. New tariffs, pushed as economic protection, raised the U.S. tariff rate to 14.1%, the highest in over a century. These show up as higher store prices. 45% of businesses hit by tariffs raised prices 8 to 15%. The cost lands on everyone, mixing foreign trade fights with everyday struggles. Gas prices are down 12% from last year, but housing, services, and food keep getting pricier. Medical costs, now at 2.5%, may hit 8% soon for employer plans. Supply chains are shifting, but the real costs are just starting. Businesses used old stock, but as it runs out, prices rise, sometimes a little, sometimes a lot, always hurting trust. People's confidence is dropping, with June's index at 93.0, one of the biggest falls since the pandemic. Rent, tuition, and medical bills grow faster than wages. The struggle isn't about economic terms, it's about losing security. Every store or pharmacy trip reminds people that, solved, inflation doesn't feel true. It's about stress, tough choices, and less room for error. Is this a rough patch or something harder to escape? Jobs look solid at 4.2% unemployment, but the market feels weak. Fewer people are working. The participation rate is 62.4%, the lowest since the pandemic's start. Millions left the workforce, not for better jobs but for uncertainty or side hustles. People aren't quitting as much, showing they don't trust the future. Half of May's new jobs were in healthcare alone. Retail, construction, and manufacturing are shrinking. Gig work is huge. 40% of Americans earn some money through apps like delivery or freelancing. What was called flexible is now a last resort for many in an economy without steady jobs. Productivity has stalled, and business investment is dropping, with spending on buildings and machines set to shrink or stop by 2026. The economy shrank in the first quarter, and growth may crawl at 1.3% this year, half last year's pace. For families, this means flat wages, rising bills, and less job security. Life feels on hold, with cautious choices. The expectations index is at 69, hinting at a recession. From farms to cities, people brace for something uncertain, not a boom. The idea that hard work pays off feels harder to believe. The stock market looks strong, with the S&P 500 hitting highs and tech giants posting big earnings. Some call it a new era. But the dollar dropped 10% against other currencies this year, its biggest slide since the 1980s. To foreign investors, stock gains look less impressive in euros or yen, sometimes barely positive after inflation. Money is flowing to Europe, Japan, and emerging markets for stability. Big tech benefits from the weak dollar, but smaller businesses face higher costs and uncertainty. Markets are jumpy, reacting to talk of changing the Federal Reserve chair or rate shifts. Debt is growing. Public debt over $36 trillion, household debt past $17 trillion. More people, especially younger ones, are missing credit card and car loan payments. Buy now, pay later. Apps are up 30%, but so are missed payments. Housing is shaky, with prices in big cities slipping and unsold homes at levels not seen since 2008. Markets seem strong, but it's a fragile strength built on a weak dollar, debt, and a real economy, wages, jobs, security, falling behind. Blame is everywhere. President Trump's return brings old slogans and new targets. Tariffs are called heroic, the Federal Reserve a villain, and migrants are blamed for pressures from corporate and policy choices. Speeches and tweets are a show, but tariffs, now at 14.1%, hit as higher store prices. Over 45% of businesses pass costs to customers, dressing economic pain as patriotism. Social media spreads talk of trade wins, but grocery bills grow quietly. Trust in institutions fades as attacks on the Federal Reserve and rivals deepen divides. The top 10% control 2/3 of wealth. Healthcare and education, meant as paths to success, are heavier burdens. Student debt weighs on the young. The American dream is retold as anger and mistrust. Hard work and rules should pay off, but the rules shift, and rewards go to fewer. Blame, not reform, drives the talk. The crisis isn't just money, it's about culture, trust, and personal struggles in a divided nation. America is at a turning point, caught between old promises and new distractions. Stocks hit highs in a weaker dollar. Numbers show strength, but life feels like worry, division, and loss. Tariffs and tweets shape the day but can't fix years of drift. Old tactics, blame, distractions, quick fixes, aren't working. Growth slows, costs rise, and the gap between haves and have-nots widens. What happens when excuses run out but the path doesn't change? How long can hope be borrowed? Stay with Economic Circuit for the real story behind the numbers. Subscribe and support us on Patreon for analysis that looks beyond headlines. This story, like the economy, isn't over.